Hello, everyone. Welcome to the Small Cap Insights podcast powered by Darrow Associates. My name is Jack Greenberg. Joining me today are Vishal Mishra, research analyst, and Michael Demaray, president, both the Bard Associates. Gentlemen, thank you for coming on the podcast today. Of
Thank you for having us, Jack.
course. So to start us off, I'd like some background on both of you guys. What led you both to end up at Bard?
Sure. So I came to Bard Associates in 2020 as part of the succession plan for Tim Johnson, who founded the firm in 1982. So prior to that, I had started my career in management consulting, doing due diligence on middle market, or public company and private equity M&A and corporate strategy. I also worked for Pets.com, which was private when I joined it. After a second round of funding, we went public, and then I left about a month before bankruptcy. Did some investing on my own and started a fund, and also did was most recently in a turnaround management consulting role prior to joining Bard.
Yeah, and I've been with the Bard Associates since 2022. Last 25 years, mostly in banking, finance, and last 10 years investment business. And I was, running a small microcap fund and I've been in touch with Michael over various, long-term oriented businesses. Like I remember talking about Constellation Software and things like those. And he knew me, and there was an opportunity at Bard, and so both him and Michael hired me.
That's great. Thank you both for that. So let's dive a little bit into Bard. Can you guys speak on the firm's investment philosophy and what you think really separates the company from other asset managers?
Sure. Yeah, I think if we could sum it up in one phrase, it would be sort of think big, invest small. Tim started the firm in 1982 with this belief that there was opportunity in small publicly traded companies, that they would outperform over the long run, and has really stuck to that knitting ever since. And we've taken that mantle and continue to do that today. So, in terms of what sets us apart from other asset managers, we're fortunate to have a 40-year history in the space, which I guess I didn't appreciate as much as I do now when I first joined. That affords you a lot of relationships in the space and a lot of history. And I think context is worth 30 IQ points if you've been around this business for 30, 40 years, and you've seen managers come and go. You've seen different businesses that have worked out well, and you have relationships that can be super helpful.
Yeah, and I'll just add one more thing to that, which is we're truly long-term oriented. Um, as a result, so we hold on to the business as long as we believe in the business and the management team, which is executing on it. Um, and quarterly variations in earnings do not bother us as much. So, and management teams see that and they know that about us. So they love having us as investors.
Mm.
So we almost sort of get a preferential treatment from managers in this space, and it's great to have this reputation when we go and speak with management teams.
Yeah, and just kind of as a tangent here, I like to ask most of my guests this. So what individually compels both of you to the small cap space? Because, there can be a lot of stigma around the space, and investors sometimes don't really understand it the best, but I'd like to get an understanding of that.
Yeah, I think that um, if we relate it back to kind of our investment philosophy and investment beliefs, first and foremost, there are two sources for investor return. There's valuation and there's corporate performance. Valuation is simple, right? It's buying something for less than it's worth, and hoping that that price difference closes sooner rather than later. Corporate performance is the value that's created by the business itself. And
Mhm.
that's the function of three things. First, does that business, or can that business, or will that business earn an excess return on invested capital? So for every dollar it invests, what sort of return is it earning on that dollar? The second thing is, Does it have a competitive advantage that will protect those excess returns over time? And then lastly, how much capital can it put to work and for what length of time can it put capital to work at those excess returns? So if we think about that as sort of the source of investor returns, for us as small and microcap investors, where we are advantaged is that we generally have long reinvestment runways and opportunities. So we have companies, we're hoping to find businesses that can invest a lot of capital over a long period of time. And the larger you get with businesses, that runway sometimes shrinks.
So, are there any particular types of industries or business models where you find those three things more often than other industries?
I'd say that we tend to take every business and try to scrutinize it on its own merits. However, I think that we find that companies that are not cyclical, that are not commodity exposed or commodity driven, they're not price takers, that they have some sort of pricing power that's key and essential. Um, Oftentimes, it's going to be asset light businesses. Sometimes the competitive advantages are driven by intellectual property or technology.
Mhm.
Sometimes they're driven by business processes and the inability to, the high switching costs, essentially, the inability to rip that solution or service out of your workflow for a business. Maybe it's a relationship competitive advantage. Um, I would I think that those are kind of just some descriptions of things that we find, but we try to be pretty open minded about what companies we look at. Vishal, do you have anything to add there?
Yeah, so same thing. I would just combine those two questions, which is like, what do you find compelling about small caps, and the what Michael said about ability to find competitive advantages, is we want to be able to figure out what the business could look like 3 to 5 years or 10 years out. And smaller micro caps, they're single line of business. They're smaller. They're easier to analyze if you have access to management teams. All those advantages in this space exist, which do not in other businesses. So and and we can get to that faster than for larger caps or many other businesses.
And touching on that access to management teams, what are you guys looking for when you meet with management teams, and how would you define a strong management team? What are you guys ideally looking for there?
I
Million
think
dollar question.
when we meet with management teams, we're trying to do a couple things. One is the first thing is we're trying to understand the business, right? Yeah, you can look at the numbers on the paper, but we want to really understand, almost like you would understand the corner grocery store or a lemonade stand. Like, and I like to start above the revenue line. Tell me about the competitive landscape. Who are you competing against? What are the substitutes for your product? What motivates your customer? Why are people buying from you? How do they make their purchase decisions? So then we ultimately get down to the revenue line, and then I like to walk down the income statement and talk about, you know, not in a robotic fashion, but just sort of kind of flow down and think about every single thing, whether it's your cost of goods sold or whether it's your operating expenses and the leverage that you can apply there. Um, so when I meet, and then you have to get to the balance sheet, right? What kind of capital do you need to invest to generate the sales and hopefully the profits that we just discussed on the income statement? So they're all tied together, right? If you built a three-sheet model, they should all tie together. When you interview a management team, we got to walk through everything and make sure it all ties together, and we need to understand how that business works. So that's the first thing. We want to understand the business. The second thing is we want to hear from you how you're going to create value. If you can't articulate to me how you're going to create value, then that tells me something, right? That tells me about what you're thinking about on your free time. If you're obsessed about, shareholder value, and you can come to me with very specific actions. Okay, we're going to take out this much headcount, or if I make this investment over here, I think I can generate that many sales. That tells me that you've been thinking about that as a manager. You're obsessed about it and you're on top of it. If it becomes very nebulous, like, well, I think we might do some inorganic growth, and I've got a list of these 100 companies that I'm looking at. Well, it kind of shows me where you are in that process. And I'd prefer to be invested, with somebody who I think is a good operator and capital allocator. And then lastly, I think we want to understand what we don't know because every industry is idiosyncratic, right? So we need to understand, if we're new to the industry, or even if we're not, what don't we know about this business that we should know? Vishal, anything
Yeah,
there?
that's great. I should probably say nothing to add, but maybe I'll add one more point, which is that we're trying to figure out the long-term competitive advantages, which is um, and will it sustain over the long periods of time? So, and that goes to Michael's first comment, above the revenue line, because that happens all above there, which is how many customers will buy the products or service from this business, and then you flow down the income statement and at what price and what unit economics. Um, and so that's what we're trying to figure out through management meetings, through primary research, is whether it's a good business and it's set up to succeed over long periods of time.
Yeah, I always think that for especially small cap companies that, management teams are for me the most important aspect in driving value. But I'd like to ask either of you guys, you hold any kind of views that might be contrarian to commonly accepted investing principles or counter to those?
I think when it comes to our investing, that's not how we see the world. Like, we're not trying to be contrarian.
Mhm.
I think, a, a lot of the fundamental principles of investing are sound. We don't need to reinvent that wheel. It's important for us to have a different point of view than the market in terms of the price of the asset that we're buying, or maybe the durability of the competitive advantage, how long those excess profits will last, or whether they will materialize or not, because we get paid as investors by having a sort of different view on a specific asset. But I don't think, for me personally, that I could say, oh, well, I have this great contrarian view about the world, and this is what makes me a great investor. That's just not how I see the world. Vishal?
Yeah, nothing to add.
No, and I like that answer. But speaking kind of about the market in general, small caps obviously kind of seem to go through cycles of underperforming relative to large cap companies before this cycle turns. Um, how do you guys think about that cycle and where we are today, and what would you view as an inflection point to that cycle turning?
Well, the first thing I'd like to say is that the way we see the world, the index is not the opportunity, right? We don't define small caps by the Russell 2000 index. Um, the reality is only 5%, or maybe if you're lucky 10% of the businesses that exist in the entire market, not just in small cap, are creating the value that exists in the market. So it's our job to find the 5 or 10% in the Russell 2000 or in the small microcap land that are going to create the value. So the only difference is in the S&P 500, the Mag 7 comprise a much greater percentage of that index, and those index holders have accrued the benefit of having such a large allocation to those businesses that are quite wonderful, right? They generate high returns on invested capital. They've almost grown, revenues and profits without having to invest much capital until this most recent AI investment cycle. So, and in the small microcap, the 5 or 10% down there are probably a much more diluted portion of that index, and that index has not performed relative to the S&P 500. But that's not. We're not trying to make a timing call on, hey, look, small caps have underperformed for 15 years, and this is the moment that it's about to turn around. That's not how we see the world, and I don't think that's, as an investor at this in this space, I don't think that's a healthy way to view the world, because then you're just banking on the tailwinds of the asset flows and hoping they're going to come back down into your space. Instead, we're trying to find businesses that create value on their own merit and that are going to grow. And then the second thing that I want to that we want to point out is that we don't sell these companies when they get big. We let the compounding work in our advantage. If they grow beyond small cap and they're still working as a value creation machine, we hang on to them. So we're not really making, even though we start in the small microcap space, that's not really the bet that we're focused on. We're focused on reinvestment runways and value creation. And we think that there's a lot of opportunity down here in small and microcap space. But it's not really a bet on, hey, look, we're small caps are going to turn and be the next big thing.
And the only cycle element of is that the pricing is low. I mean, like as a result of what Michael just said, the 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 Mag 7, the prices are high and justifiably so because the return on capital for those businesses are phenomenal. They have grown earnings without requiring much capital. So it's quite justifiable. Whether it will persist in the future or not, that other people can decide. We don't what we focus on is on our in our segment of the in our smaller businesses, simpler to analyze, single line of business, and we can say more confidently, um, oh, this will be a good business over the long term. And we are not paying a high price for it. And the combination of those two will result in us generating attractive returns for our clients.
Yeah, that's great. And kind of just speaking to the future, I know you guys look at companies on more of an individual basis, but do you think there's any themes that investors might be underlooking that um, might might kind of take off in the next few years?
Hmm. I don't have any thoughts on that one. Vishal?
The only theme is that you know if you can figure out, now people are saying trillions of dollars going into AI and return on investment for those, and there are lots of blogs, probably tons of blogs and discussion going on that front. If you can say something, lean toward confidently that this will happen, well, great. Then what we know is that there will be large investment in data centers. And are there any suppliers who are set up? Those are small businesses who are set up to supply whatever that is needed by data centers. It could be um, a small segment of the market, like cooling or chilling or something needed by data centers, and somebody has a unique technology which really lowers the power needs for data centers. Well, that's easier to analyze than what other people are trying to figure out. So we try to figure out what we can, um, and so the theme here is try to understand, what the business could look like 5 years out. And if you cannot, then do not try to beat it. It's like in Buffett says, do not try to beat around the edge of your circle of competence. Stay in the center of the circle. Don't go around the edge. And we find that philosophy easier to implement in our space.
Yeah. And
Yeah.
final question, kind of speaking to philosophies, what is kind of one core belief that has guided you guys throughout your career that's kind of remained true?
Michael, Michael said you should respond to this. So core belief is that we find good businesses uh, and management teams, and you hold on to them. Do not be so, like, bucket yourself into some matrix that, oh, it has now crossed the small cap boundary and we should sell those. No, no. If they are creating value, um, return on incremental capital is high, we hold on to them. So as a result, even though we start small and think big, as Michael said, the businesses become big, we don't sell them. And that's very tax efficient for our clients and generates after tax returns, which are much better than if we had the belief that, oh no, we have to stay in small cap, and as soon as become like whatever, oh, we have to sell this and find the next small cap. No, we do not do such things.
Yeah, the core value, the core belief that's ruled over my entire career is basically focus on value creation, right? And that's it sounds simple, but it's complicated, and you have to look at every situation individually. So I think that's like to me, it's a first principle. And, I don't want derivative principles, determining what we do. And I think that if we just remain focused on that, we'll hopefully do well in the long run.
I like that. Well, thank you very much, Michael, Vishal. Appreciate you guys coming on the podcast today. Their website is bardassociatesinc.com. Please go check out their work. They're great over there. And thank you all for listening to another episode of the Small Cap Insights podcast. Thanks, guys.
Thanks so much, Jack.
Thank you for having us.